This is Cece. Welcome to the Orbit. It is Thursday, June 6th. We've got stocks pretty much unchanged. A little bit into the trading day. We've got about 4.5 hours till the close. We are looking at an SPX at 53.52. And as you can see, we made a new high this morning. I pulled back a little bit, and we are basically unchanged. But what a week it has been. If we go into the 1 week chart, you can see this rally. We had that move last Friday into month end, and the question was coming into this week, was that just some, a lot of funds and all marking up their positions into month end, or was it a real bullish turnaround in that market and the end of that little sell off there? The answer was it has been this slow grind higher right to this point, and that is the type of thing, that slow grind higher, that is the type of conditions and the type of moves you tend to see at a very low vol environment like what you're in. As far as the rest of the day on 0DTE wise, we've got about a 15, 16 vol, so about 15 points in either direction. Tomorrow morning, we have the NFP jobs number, and there's going to be a lot of interest in that, obviously. Looking out at that vol right now, we are only at about 16 IV for tomorrow, which is not very high. But for now, that expected move into tomorrow is probably about where it will be at the close. So maybe a little bit less than this, but above 0.6%, which is a lot more than a typical day. A typical day recently, we've been seeing about 0.4% expected move. So that's the premium in the options market for tomorrow morning. Got this CPI next week, which is, the options market is putting even a little bit more importance, arguably, to that than the jobs print. But so those are the big economics. And of course, we've got another Fed meeting as well coming up. So that's what the market's got its eye on what was going to happen with rates. Speaking of rates, let's go into TLT. We have TLT at 93. And if you're wondering, why stocks have been strong and grinding higher recently, this is one place to look. TLT has made a pretty big move since it really liked that CE number last week. And it's interesting because stocks didn't initially, that you're having stocks catch up to this move that TLT and some of the other bond tracking ETFs are doing. So what this means, TLT goes higher, that means yields are going lower. And TLT is the 20-year, and you can find more short duration, but it's happening across the board. So keep an eye on TLT. The other thing that's been helping stocks the last week has been this move in USO. You look at this, we were up about 78. We're down to 75. It's coming back a little bit the last couple of days, but it's got as low as down near 70. And if you back this chart up, that's a pretty big move in USO. We were up at about 83 back here, and we are now at 73. So a pretty significant, more than 10% move we have seen since April. As far as individual stocks themselves, obviously GME is in the news a lot, and I'm seeing some hot takes on the options positions involved in GME. Bottom line is there is the big 20 level call position, and I'm seeing a lot of things about what's happening on the market maker side and everything like that. Because those calls are in the money, there's not really a massive gamma effect or short squeeze effect with those. Currently, I think they're about 80, they're close to 90 deltas right now. So the market makers on the other side of that position are basically long 90 shares for every one call they're short. And they might even be overhedged because there's a lot of retail call buying up above these levels, up above where the stock's trading. Be careful what you're reading out there about how this might play out and what that might happen. Now, there's been talk about, an early exercise. Right now, there's still extrinsic premium on those options. And so any early exercise is, essentially giving up $20 million in extrinsic premium on those calls. So obviously nobody knows how this is going to play out, but that is, as far as exercising, early exercising, or taking, those finishing in the money on June 21st, that is a lot of money that needs to be posted to take custody of that many shares of stock. And so if there is any profit taking on that call position, that will most likely put pressure on the stock. And the way that is that's either the calls being sold, which means the market makers have to turn around, the market makers that are on the closing, buy to close side of that trade, they need to turn around and hit the stock and sell some of their long shares, or selling stock outright against those calls has the same effect, obviously. By the way, GME reports earnings next week, and that is before those calls expire. So it's an interesting story all around. All around, but just be careful with some of the kind of conspiracy theories with rocket ships out there. Unknown thing here is, how do you get out of those calls without moving this stock? And I think that's probably the bigger story than some of the conspiracy theories out there. Other big story, obviously, and it's been a big story for a while, is NVIDIA. Just a massive move here over the last week. So, we've gone from basically down near 1,000 up to 1,200. And this, of course, is going into a 10-for-1 split. And the run up is right before that split. That there's nothing, a run up into a split like this, especially a stock in this kind of demand. This is not uncommon to see a run up into the split. How it behaves after the split is not certain. Something from the options perspective, because you now have that many more shares out there outstanding, and you have that much more option premium, 10-for-1. So sometimes, not all the time, but sometimes it can actually change the vol backdrop and the way a stock behaves. So going from $1,000 stock to a $100 stock, you're going to see IV probably higher, but you might not see the same types of moves that you used to see from day-to-day volatilities. But it'll be something to watch. Nobody knows for sure how a stock behaves after a 10-for-1 split until after it happens. But there's some things to look for. Just like, does the realized volatility of the stock start to change?